Hey, what's up everybody? Welcome back to Keeping It Real with Jon Lopez. I'm Jon Lopez with Remax Advantage Plus. Today I'm here with Tyer Wiltse from Cambria Mortgage. He is a loan officer that I work very closely with, and we've been working together for a long time. He does a great job for all of my clients. Thanks for sitting down with me today, Ty.
Absolutely,
How are
man.
you, bro?
I'm good, man. Good to see you.
Excellent. Good. Always good to see you too. So let's just dive right in. Why did you become a mortgage lender?
Well, it was interesting. I thought that I was going to be a ski bum in Denver. I thought I was going to be able to go and travel the world, but my mom pushed me to go into college, and when I was in college, I realized that I was pretty good at math, and finance came naturally to me. And I had a couple of conversations with some friends of mine to say, what did I want to do, and talk to some mentors. And they said to me, if you want to work with finance, you need to work with debt first. And that's where I got into mortgage lending, and I never left.
What kept you in the business?
And I started realizing that I could make an impact on people, with their financial goals through debt management. Discussing even little things as far as auto loans, as far as, how credit cards are going to impact people, and, really helping them budget to be able to, gain wealth through real estate. And it's become a lot of fun for me. I've been doing it now for 19 years, and, I've seen a lot of people progress from the idea of just their original starter home to now that starter home is an investment property for them, and they're growing their families. And I really enjoy helping people throughout the process, not just one transaction.
Yeah, not only do you help just do the mortgage, but you're also helping the client or the purchaser, the home buyer, on how to plan out your financial situation and how it affects you in the moment, and then also how it's gonna affect you or help you in the future, which I think is awesome.
Yeah, thanks, man. It's a very big decision, and people just can't look at what's my payment going to be, how much do I have to put down. Right. They really have to look at what's going to be coming up in their lives, what goals do they have, what things that they want to achieve, and then if I have that information, I can help tailor something to their specific needs.
Yeah, because building equity, after 3, 4, 5, 6, 7 years, you can definitely put that equity into work. I mean, a lot of us think of it as like our big savings, but we all know that in this country now, you need to have good debt to build wealth. And so we definitely try to help our clients also see that so they can reach those goals as well.
Yeah, no doubt.
Yeah. So let's talk about today's situation with mortgages. I know that there's a lot of fear and a lot of headlines. So what are some of the positive things that we can help our clients and our audience know about the current situation?
Yeah, no, I think rising interest rates make things, less affordable for people, but also it provides an opportunity that there's less competition out there. I think if you look historically, rates have been far higher than they are today. However, people got so used to, 2% or 3%. And
spoiled for a long time.
Yeah, and, that was a really good thing. But also right now you can look at, if there's less competition, you can go and acquire your dream home with the idea of restructuring your debt in the future. You have less competition. Where when people are saying, I want to sit on the sidelines, if they wait 2 or 3 years, they might lose out on, paying down their home by 15 grand and their home appreciating by 35 grand. And when everything comes more affordable, there's going to be more competition in the marketplace. So you might think that a home might be cheaper, but you're going to have to pay over ask again just to get in. So a lot of people that I'm talking to now, if they're excited about buying a home, let's find a home that's going to work for them in the future. And that payment might be a little bit higher in the short term, but 2 to 3 years, that's going to pay off, exponentially for them.
Right. The demand is still higher than what the inventory we have. And so prices are continuing to go up. And so like you said, if you sit on the sidelines, you're basically losing out on building more equity in this hot time right now, even if the interest rates are a little bit higher.
And another piece that I would touch on that is you see all this stuff on YouTube, you see all this stuff on Facebook of a potential housing crash. Well, those housing crashes are primarily in the port cities. Your New Yorks, your Las Vegas, your Californias, your Floridas. Those companies got really saturated because of COVID, because anybody could work from anywhere, right? Where we are in our market, we have an extremely stable job force, you're not going to see reductions in costs. If anything, costs are going to go up in the next 5 years. So if you buy now, you're going to be ahead of the curve that when interest rates go down, you can restructure your debt to make that home more affordable, but gain that income. Whereas I think where a lot of this, conversation about a housing crash or a housing correction, those are in some of these larger states where there was an overabundance of building, there was an overabundance of supply now, and people are now going back to work. So these areas are getting affected.
Relocating to, like
Sure.
Miami, for example, Florida, for example, people just flooding to go down there.
Yeah, absolutely. I think that's all going to correct itself, but where we are in our market isn't slowing down.
Super stable, I also wanted to touch on, so people can understand what the difference between online lenders are and a traditional lender like yourself. I want you to tell our audience, what those differences are.
I'm not interested in, bashing anybody in our industry or saying which one's better, which one's not. I will say that there are some benefits to working with somebody that's close to you. I work for a company, Cambria Mortgage. We're a Minnesota-based company. We employ Minnesotans. We want to be able to provide loans for people in our state and in surrounding states. I want you to be able to come in, sit down with me, grow the relationship, and that you're working with somebody that's going to take care of you. Where an online lender, they might be in a different state, they might be in a different time zone, where they're not going to give you the kind of personal white glove attention that, myself or other people in our industry that, do loans right here in town. And I would say that's the biggest difference.
So what are the greatest challenges to you, or what's the current greatest challenge that you have right now?
Honestly, with all of, my years of experience and hearing horror stories from other people and, hearing the complexities of what has gone wrong, I think the greatest emphasis that I would want people to know is how valuable it is to talk to a loan officer prior to looking for a home. Mm-hmm. At our company, what we do is we pre-approve a client, meaning that we underwrite it all the way. So we eliminate all financial, contingencies. So when you go and put an offer, you put in an offer for a client, I also call the seller's agent to say, hey, we have this client all ready to go. I get to introduce myself. We get to tell them that we can close quickly. If I don't get to meet with the client right away, I don't necessarily know if there's something that hangs them up. But if I get to meet with them, even 2 weeks prior to you guys going out and looking for a place, then we can figure out what things that we need to improve on, push back our watch list, an additional month, clear up some stuff. You and I even had that client a couple years ago that they had some credit challenges from a company that misrepresented them and put that late fee on them, and we were able to, within 2 months, get that late fee removed, increase their credit score by 80 points, and it changed their interest rate by 0.75%. So those types of little things that we can do as a team and as a partnership can really put the client in the best foot possible, because it is so competitive out there right now. And with multiple offer situations, when we have teamwork like that,
we got to set ourselves apart.
We get a lot,
stand out.
Absolutely, and we get more accepted offers that way as a team when we work together. If we work backwards, meaning clients ready to find a house, they find a house and then they come to me, they realize that this isn't a fun transaction because I'm asking for documents when they're thinking about putting stuff in boxes. So it's really about, having me get the opportunity of, working with their finances first, and then, the process just is so much more seamless after that.
There's a lot of people out there like, oh, well, I'm just not ready. I just want to go look and see what's going on. Well, no, you don't want to do that, because if you walk into the house that you fall in love with, the first one, and then it's like, all right, what do I got to do to buy? And then it turns out you got to go through this whole application process, and then it turns out that you have some work to do to get to full approval, and then and houses sell in one day now. So if you want to buy a house, the first thing you got to do is get pre-approved. It is the number one. Thanks again for joining us on this third episode of Keeping It Real with Jon Lopez. Ty, thank you very much for sitting down with me.
Good seeing you, man.
Likewise, always good to see you and doing this show with us. We'll see you next time, guys. Thanks.